today's Talk About It Tuesday question is actually a series of questions that lead to the main question. So I'm going to read the whole thing, but then I'm going to tackle each part of it individually to get to the real answer. With interest rates being so high, how is it possible for buildings still to be built at a rapid rate on every corner of New York City? Where's the money coming from to support the funding of these new projects? Who is living in them if it's not affordable according to what everyone is saying? And in this particular market with so much new construction, is it safe to say that I as well can take a gamble and purchase a multi-unit in this particular economy and still win? All right, so let's break this up into pieces to get to that last question. With interest rates being so high, how is it possible for buildings to still be built at a rapid rate on every corner of New York City? I think, all right, let's just deal with this. Are interest rates high compared to what? So compared to the last few years, absolutely, because interest rates were near zero for a long period of time during the recovery after the last housing crisis, but they're not nearly as high as they were in the 90s and not even close to what they were in the 80s. So how does the interest rate affect real estate? It affects the amount that you can borrow. Oh, I shouldn't even say that. It affects the cost of borrowing. It affects the cost of borrowing. That is more significant when you are a home buyer than it is when you are a developer. And let's talk about why. Home buyers get their income from their job, from their business, whatever they do, and they have a set amount of income. And based upon that, they qualify for a particular mortgage amount. That mortgage amount factors in the interest rate. So it's based on how much that person can afford to pay based on the income that they show when they apply for a mortgage. So for a home buyer, that means they can buy less home now. That means they can't afford as large a home because they only qualify for a certain amount. And if interest rates are higher, you have to factor in the cost of borrowing. When you are a developer, it is less relevant. It is less relevant because the amount that's lent to the developer is based upon the amount of income that they will generate from the project. So if the rental income can cover the cost of the borrowing when the project is complete, or if the sale amount of the project, if they're selling it, is high enough to cover the cost of the mortgage, it doesn't matter, right? It only matters in terms of how much profit the developer will get. So it doesn't stop lenders from lending on a project that they know they will get their money back on, right? So it doesn't really affect developers in the same way. Where's the money coming from? Because I believe that's the second part of the question. There is no shortage of funding available. There is only a shortage of people who are applying for funding, right? The banks didn't suddenly lose all the money that they have to lend. They just have less borrowers available because interest rates are higher, and people don't want to pay the higher cost to borrow right now. So getting funding is not an issue. If you have a project and you can show that the project will be profitable, getting funding will not be an issue if you are a developer. So that's part two of the question. The next part of the question is, who is living in them if it's not affordable to live in New York City as everyone claims? Everyone's not claiming it's not affordable to live in New York City. People with low incomes are complaining that it's not affordable to live in New York City. So New York City, and I believe Brooklyn in particular, is either the highest behind San Francisco or the second highest, is either the highest in the country right now to live in, or second highest. And I think maybe San Francisco might be number one. But we're either number one or number two in terms of the cost for rentals in New York, in the country. but there are a lot of high income earners in New York. So the issue is not that it's not affordable to live in New York City for everyone. It's not affordable to live in New York City for people making the median income in the country or lower. So there's not enough what they call affordable housing in New York City. So there's plenty of housing available. No, there's not enough housing available, period. But there are a lot of high income earners who are willing to pay a premium to live in New York City. So these new projects, in most cases, and I shouldn't say in most cases because there's a mix, but there are a lot of there's a lot of new construction being built for high income earners in New York City, and there's also affordable housing being built in neighborhoods where it's lower income. So you have actually both, but there are more people than there is available housing, period. So that's basic supply and demand. When you have more people who want to live in New York City than you have buildings available, it drives the prices up. So what's the next part of this question? I'm sorry, give me a second. The next part of the question is, and in this particular market, so with so much new construction, is it safe to say that I as well can take a gamble and purchase a multi-unit in this particular economy and win? If you know what you're doing, because running a multi-unit building is a business, right? It's not just like being a homeowner, right? So you have to be able to manage the people, you have to be able to manage your costs, you have to be able to maintain it. You know, can you make money? Absolutely. And you can do that anywhere with real estate when you have a situation where you have extremely high demand and you have extremely low inventory. That means it's a good market to make money in if you know what you're doing. So you have to choose the right neighborhood, the right demographic. And when I say demographic, I mean income demographic. And you can absolutely make money. So I wouldn't call it a gamble because gambling is a game of chance in which you don't control the variables. In this situation, there are variables that are out of your control, but they give you signals, meaning what's the demand? What is the income level of people who are in demand? What are the programs that will subsidize affordable housing if you choose to do that? What are these different variables that you can't control that you can take advantage of? And then what can you control? You can control what you build, where you build, how you build it to a certain extent, who you target as a demographic, what region you choose to be in. So real estate is always regional and always dependent upon the particular needs of that region. When you talk about the greater economy in terms of interest rates, as an investor, that doesn't matter because not so much. Of course, it matters a little bit because it's going to affect your cost, but you can make that cost up on the back end in terms of how much you charge, and the economy will always shift, and you can always refinance out later. So the time to really get bargains is when interest rates are high because that runs a lot of buyers out of the market and will eventually drive prices lower. Prices aren't dropping much in New York City because the demand is still high. There's still a need for housing. So can you make money? Absolutely, but you still have to have the skills. You still have to choose properly. You still have to develop the property to meet the wants of the demographic that's looking for a place to live. So I love the question. You can see there are multiple layers to it. I'd love to hear your take on it, but please like, share, subscribe, keep the questions coming, and I'll see you next Tuesday.